Well, as I admitted this morning, the pending home sales number shocked me. I was wrong. I need to be wearing my swing and a miss shirt because I thought it would be negative, and I thought it would be more negative than the average economist. And it came out positive. So, guys, people are finding ways to structure great deals. Let's just remind people that buyers today have a lot of power and they should only be doing great deals. So what do you guys think about this?
I mean, in this market, and we kind of touched on this before we actually went live, but structuring great deals in this market is, I firmly believe it's a buyer's market. And what
Yes.
separates that I've seen and John have seen is that, you go back 2 years ago, 3 years ago when rates were at, 2.5%, it was a buying frenzy. So your average, home buyer investor was just fleeing to the loan officers, to the market. I need this pre-approval. I need this bad. I need to submit this offer. I got to do. They weren't actually educating themselves with what levers can I pull? What levers should I pull? Right. And now when we speak with clients, they know that they've got, a week, a month. They can submit offers to the seller and wait to hear the counters back. Right. They can actually figure out, do I need to put 25 or 20 down? Does my experience matter? All of that stuff. The home buyer or investor now has the ability to not be in this kind of feeding frenzy of trying to be one of the 100 offers submitted. They can take their time, speak with John or myself, figure out the best way to structure a deal. And I'll let John kind of delve into maybe the small intricacies of all the better deals that we see.
Yeah, I mean, most recently we kind of talked about it last week, but what's been really popular, what I've been presenting to a lot of clients has been, arms. I mean, you hate arms, but like we're in a weird situation where if you're buying an investment property for the first time, and we were talking kind of touching on the 6 month arm, that's at 6.25, and rates aren't expected to shoot up like crazy over the next year. This is almost the first time people can take advantage of that and keep their payments extremely low with less risk than, obviously we can't tell what the market's going to do in the future, but less risk than previously where we knew rates were going to continue to go up, right, even higher. So we're kind of in that weird space where a lot of clients can actually take advantage of maybe a 6.25 rate, $1,000, $2,000 less in payment for a year or 7 months or 8 months, however long it is, before they get to refinance again. Because I think the general consensus is, finally the government's going to admit that we're heading into a recession, and it's on the horizon, and they're going to be, okay, well, how do we mitigate that as well? So and also other strategies like interest only, right, might be popular right now to keep your payments lower. If you want to go a 30-year fixed, you want to go a fixed route where the rate's slightly higher, then you can use interest only to bring the payment lower so that you can positively cash flow during that time period without really hurting your equity. So you have that as well as a tool that is, usable for you to kind of make sure you can cash flow over the next coming months, build up a reserve, stabilize the property, meaning get rents up and get everything up, and then be able to refinance into a longer term loan at a lower rate again, right? So there's a lot of opportunities out there about people writing great deals, but obviously all of it starts previous to submitting the offer, right? Because there's so many ways to actually submit an offer, and a lot of people call us and ask us, hey, what's the rates right now, right? That's the number one question we get. What are the rates right now? But we're like, hey, it really depends, right? Because especially on investment real estate, it depends on the property, how it cash flows, how the structure of the property is. Is it a fixer upper? Will it pass an appraisal? Because if it won't pass an appraisal, then we might want to do a two-step. We might want to do a bridge loan, buy it, you fix it up a little bit, and then refinance on the ARV 3 months later, right? So, and that might get you the best yield. So there's so many different ways to approach this. It's all about the individual deal itself. And like you said, writing a great deal, it all starts from the beginning.
Well, I couldn't agree with both of you more. And I've been very clear. I called this 3 or 4 weeks ago. I said, we're only doing great deals, no good deals until February 1st. I'll reevaluate February 1st because I don't know where this whole madness is going. So only great deals. And when I look at great deals, there's really five levers that someone could pull. And unfortunately, most people only think about two of them. So I'll go through them really quickly, right? Everybody thinks price. I can't tell you how many crash bros or crash followers or their people come on my channel and just scream bloody murder because they think prices are going down. Okay, Maybe. But here's the deal. If you're going to write a great deal, it is absolutely a strong suggestion to write it under list price. Certainly, if you're doing what I talk about, watching days on market. If you find days on market are longer than normal, write something below list price. I mean, the only thing the seller can do is say no, right? So, write an aggressive offer like Patrick Bet David says. Next, closing costs. I do not see any reason at a minimum you're not splitting closing costs 50-50. But in this environment, because buyers have all the power, I would try to put that all on the seller. That's two. Rates. This is where you guys come in. It's not about the rates. It's about the loan structure, right? The stack, all of those things. So again, this is why your guys are here to help people. Then there's repairs, right? There was a long time where you do inspections, you find $8,000 in termite damage. You got to eat that. Well, you know what? Have the seller fix it in escrow. Why not? And then finally, terms. Sometimes you get the seller to take back a second. All right. Sometimes you get a blended interest rate that's even below. So I just think there's so many different levers you can pull. And you're right. The market is slower. This is going to be the second best market to find a motivated seller because they're going to start to stand out, right? They got to sell. They got to sell. They got to sell. Well, my job as a buyer is to do great deals. So I'm excited for what's coming. What do you think of all that?
No, I think you nailed them all on the head without us having to, regurgitate exactly what you just said. But it's making sure that if you are in the market to buy, making sure that you know all of those levers, making sure that you're at least trying to pull all those levers, right? They may not all work, right? But first off, I think the biggest thing we've seen on purchases is now having, again, we had a little bit of a pause, but the buyer's market that we're in right now is as strong as I believe it could be with regards to sellers and asking for sellers credits, concessions, or completing repairs in escrow. I've got 5 or 6 right now that have one's pretty extensive, but anywhere from 10 to 100K worth of repairs getting done in escrow by the seller. In escrow. Yeah. So it's 2 years ago, good luck.
No chance.
That was not happening, right? Yeah. And one thing I did want to touch on too that I think is important when clients are asking about rates, what's the best rate? Like, you got to see where, when you speak with John or myself or somebody like that, does it make sense for me to put 30 down so that I get 0.25 better? Or maybe I'm getting 0.75 better. The property still cash flows. Does having that extra 10 or 15%, would I rather buy 2 properties with that money and be at 8.25, or would I rather buy 1 and be at 7? Right? There's just different levers that you've got to make sure that you're pulling and understanding now that you have the time, because we're not in the 2.5 to 3% feeding frenzy.
Yeah, this is what I hope everybody watching this is like, hey, I got a deal I want to run by Convoy, one of you two, because it is about that partnership, right? Tell me what you're trying to do. You're not competitors to investors, right? You're trying to help them structure and create that great deal, or better yet, make the deal even better. So I challenge, I ask, I implore the audience, if you have a deal you're looking at, bring it to these guys and see what might be possible. How would they do that?
Go to convoyhomeloans.com and let us know you came from ORAT.
All right, guys, let them know you came from ORAT. You get one of these 2 guys. If you don't, I can't promise who you're going to get, but it won't be one of these 2 guys. So thank you so much.